Today, let us have a small briefing on micro, small and medium enterprises products and schemes. I already discussed about the MSME, that is micro, small and medium enterprises, in my previous video. That I will put link to this video also. And let us discuss some of the products here under MSME segment. So, development of the product is one aspect and marketing of the product is another aspect. Unless the product developed is not marketed, there is no use. So, the field staff at branch level, they have to market the products. So, for that reason, we will have a small discussion on these products in this video. You are aware, SME, that is small and medium and micro enterprises, are not just manufacturing sector. Please note it. It includes trade and service sector also. Before developing the products, we should know what are there in the service sector. One is education, second one is healthcare, third one is tourism, and fourth one is construction. Then IT and IT enabled service. IT means information technology. Nowadays, main focus is on IT and IT related products also and services. And next, media and entertainment. All these will come under services sector. Some of the examples I have given here. Same way, in the manufacturing sector also, these sectors are growing very fast. One is auto components, then textiles, then pharma, then engineering products and engineering and chemicals. All these will come under manufacturing sector, which are having lot of potential now. Two trends are observed under SME sector. One is ancillarization, that means supporting the main industry. Second one is export orientation. So all these things we have to discuss. SMEs are not homogeneous group. They require different products and services. What are those? Let us have small discussion. They are traders, wholesale and retail traders, then manufacturers, then services, and small owners, and mom and pop stores, small producers, cash and carry method, industries, processing companies, and service providers, agencies, consulting services, personal services, restaurants, and travel and tourism. All these will come under this MSME sector. So this is not a homogeneous group. Let us discuss some of the products under SME segment which we can target to the specific customers. India, the rice mills are processing around 85 million tons of rice per year. Okay, and the recovery percentage in respect of the whole grain is around 62%, 60 to 64%. If 100 kg of paddy is milled, we will get 62 kg of rice. Or if it is a better practice, we can get even 64%. Okay. And in respect of the paraboiled rice mill, we will get 66 to 68%. Okay. What are the products we will receive? One is rice, around 60 to 68%. Then rice bran, 4 to 5%. It is also having a value. Nowadays, from rice bran, they are making oil also. Then rice husk, it is around 25%. So it will be used as a fuel, or sometimes they may use some other purposes also. And other thing is germ waste is around 2%. So these are the byproducts the rice millers will get it if paddy is milled in the rice mill. So these byproducts is a benefit to the rice mill, and this is a profit to the rice miller. Let us see a rice mill of 2 metric tons for our capacity. Here the land required is around 2 to 2.5 acre. Whether it is operating in single shift or double shift, all these things we have to ascertain. And the land should be proper elevation. There should be no low-lying areas, water logging, all these things we have to see. Otherwise, we have to proper land filling, we have to take it. Then drainage and linkages with road and other communication also we should ensure here. Coming to the civil construction, one is raw paddy go down, then cleaning unit and dryer and necessary supporting structures for boiler, blower system etc. and milling section and finished product stores and machine rooms and auxiliary structures such as office, watchword and borewell, miscellaneous expenditure. All these things we have to estimate the cost and we arrive the civil construction in respect of the rice mill. What are the plant and machinery required? One is paddy cleaner. Second one is rubber roll paddy shellers. Then paddy separators, blowers, husk separators and paddy polishers, a rice grader and bucket elevator and electrical equipment and insurance erection etc. All these we will take into plant and machinery and electrical part. Activities in rice mill, one is pre-cleaning, then is destoning, that is separation of small stones from paddy, and pre-cleaning means all impurities, grass and all these things they have to remove. Then polishing, that is improving the appearance of milled rice by removing the remaining bran particles. Okay, then length grading, separating small and large and broken from head rice. Okay, this is one of the important activity. Then blending, sometimes they will mix good rice, that is head rice, with predetermined amount of brokens as required by the customer. Then thereafter weighing and bagging. Okay, all these things preparing the milled rice for transportation to the customers. All these are the activities in respect of rice mill. Boiling, it is optional, but the parboiling helps to improve the nutritional quality of the rice. That is most important, because once boiled rice, whatever nutrients are there, they will go inside, and here the quality by gelatinization of starch. Okay, then husking, that is removing a husk from paddy, and husk aspiration, that is a separation of the husk from brown rice or unhusked paddy, and paddy separation, and whitening, removing all or part of the bran layer and germ from brown rice. Okay, these are the things in the activities of the rice mill. What are the inventory norms? Stock position. Raw material, it should not be not exceeding 3 months. Okay, packing material, it is not exceeding 1 month. Stock in process, it should be not exceeding half month. Okay, finished goods, not exceeding half month. Then receivables, once the rice is sold, they have to get the money. So it should be not exceeding half month. Only for that we have to give the limit. And in respect of the receivables, we have to finance against the credit sales only, not cash sales. Margin, it is 15 to 25% as per the bank guidelines. Then what is the working capital? That is stocks of paddy, rice, broken rice, bran and gunny bags, and also receivables, that is book debts. Okay, and margin in respect of the book debts can be lowered up to 25%, where be sufficient margins for all these stocks. Okay, then repayment 5 to 7 years. Here 1 year you can give gestation, because construction activity and all these things, fixation of material, all these things, let us say 1 year we can give. And the additional working capital limits we can give depending upon the need of the customer. Okay. Dal mill finance, that is pulses mill finance. Okay, here first of all we should know what is the importance of pulses. Pulses are basically a grain legumes. They occupy very important place in human nutrition. Okay, because of their high protein content. They are also fairly good source of vitamins like thiamine, niacin, riboflavin and much needed iron also. So therefore a quality availability to the common man is a major challenge. So we have to finance good quality dal mills, that is pulse mills. Okay, we will get 83 to 85% recovery of splits with 6% broken in respect of the pulses once they are milled. Pulses. One is green gram, that is also called as moong. It is used as a vegetable and also making snacks, etc. And peas. It is used for making besan. Chickpea means chana. Okay. And arhar, that is pigeon peas, that is nothing but tuvar dal. Okay. Used as a vegetable with meals. Okay. And black gram, that is urad dal, used for vegetable and also preparation of various breakfast items, that is idli, dosa, etc. And then chickpea, that is kabuli chana, used as a vegetable. And lentils, masoor, used as a vegetable with meals. Okay. In the pulse mills or dal mills, the finance is just like rice mills. Here purpose of for acquisition of machinery and also factory building, construction of factory building, and also working capital limits, eligibility profit making unit, and quantum of loan need based, and repayment 5 to 7 years, and margins 15 to 20%. So all these things we have to take in respect of the dal mills. Ginning is also very important activity. Okay, the cotton once produced, it has to be ginned. So if 100 kg of cotton put into the cotton ginning mill, we will get lint cotton 35 kgs and cotton seed 63 kgs and wastage 2 kgs. From cotton seed, we will get cotton seed oil as well as cotton seed cake. Once the oil is extracted, we will get cake. But cotton seed contains gossypol. That is a toxic element that has to be refined before sending. The cotton ginning mill. Here, what we will finance is here for purchase of machinery, for construction of factory, as well as working capital limits, and eligibility, profit making, existing mills and new units also. Quantum of loan, please note it. Quantum of loan, always I am telling you, need based. Assess properly and arrive the limit. And the repayment will be 5 to 7 years and the margins will be around 15 to 20%. Whenever we are financing rice mill, dal mill or cotton ginning mill, we will see the security, that is hypothecation or pledge of assets, and collaterals also we have to take if it exceeds certain limits. If it is covered under CGTMSC, that is credit guarantee scheme, we need not take any collateral security. Otherwise, we have to take sufficient collateral security of immovable properties. Okay. Let us see the hotel finance. Here, in respect of the hotel finance, what we have to see is what is their requirement, whether working capital or term loan. Term loan is required for equipment, that is tables, chairs and decoration, all these things, this term loan is required. And working capital is necessary goods, necessary materials they will purchase. So, eligibility, individuals, proprietorship and partnership, all these things we should see. Here, quantum of loan, that is need based, and what are the nature of facility, what are their requirement. As per their requirement, we can finance and we will arrive the limit. Then here security, we have to take the mortgage of property, that is most important, and also personal guarantee of the promoters. And this term loan repayable in 7 years. The term loan is repayable in 7 years with equated monthly installments, because they will get monthly rotation. So it is better to fix monthly rotation. Okay. And the margins should be around 20 to 25%. General purpose loan to MSME segment customers, that is micro, small and medium enterprises customers. It is for the purpose to meet the capital expenditure, including technology upgradation and research and development expenses and ISO certification, etc., etc. And while financing this loan, we should see that accounts with a good track record and minimum debt service coverage ratio should be 1.75. We have already discussed debt service coverage ratio. That is, if the unit is financed 1 lakh, it should earn at least 1,75,000. So debt equity ratio 2:1. It should not exceed 2:1. That means if we are financing 1 lakh, the unit should generate 1.75 lakhs profit. Okay. Then debt equity ratio, it should not exceed 2:1. Debt should be 2 and equity should be 1. And it should not be more than 2. That means debt should not be more. And one more thing, the maximum disbursement you can fix a limit and on that basis you can give loan. Then repayment will be 3 to 5 years. And dispersals will be different dates with 12 months. Okay. But please note it, while financing this one, we have to take care modernization, technology upgradation, liquidity position, etc. We have to verify properly because we have given to the customer, let him do whatever he like it. But we will see the end use of the funds. Okay. Some of the micro, small and medium enterprises customers say that they cannot able to submit the stock statement every month. So in that case, we can extend mortgage loan against the security of the urban properties. And here it is also called as hassle-free working capital or contingency finance to borrowers in trade, services and industries. Okay. Here we can extend under CC, OD, DL, TL, that is term loan and overdraft and cash credit and letter of credit and bank guarantee. All these facilities we can give against the mortgaged property. It is a hassle-free loan. Let him submit at a 6 months interval stock statement or sometimes let them submit for yearly stock statement. There is no problem. Our main security is urban property. But the business activity should be going. That we have to ensure. We can finance car loans to SME sector customers also. It is a term loan. Okay. It to promoters and partner. The repayment will be 7 years. And our bank hypothecation charge should be noted there in the RC book. That is with registration certificate, that while doing the RTO registration, we should ensure that bank hypothecation charge is recorded. Okay, that precaution we have to take here. Financing to the doctors. Nowadays, opportunities in health segment is tremendous. And if you know, India will be the top 10 global pharma markets by value. And pharma revenue is increasing day by day. And a lot of increase in the health care also. And because of the health insurance coverage and better health care infrastructure and growth of income levels. And even rural areas and tier 2 towns also contribute 50% of the market growth of the aspect of the health segment system. Let's see what are the scheme guidelines under doctors financing scheme. Okay, financing to the doctors. One is for the purposes for setting up of clinics, nursing homes, laboratories, purchase of medical equipment, ambulances, vehicles, any other activities related to their medical profession. And eligible, who are eligible? Qualified medical practitioner, age group of 25 to 60 years, including dentist. Okay. Here the maximum limit depends upon the their requirement. If they want to construct a nursing home, they require more. If they want to purchase medical equipment, they require less. All these things we have to see. And even for purchase of medicines also, we can finance here under working capital. Small working capital limit also, around 10 to 15% working capital limit also, you can put it. And Here, no collateral security is required. Why? Because the nursing home itself mortgages it to the bank. So, no collateral, other collateral securities are required. And a little bit of liberalized finance to be given to the doctors. Why? Because their profession is like that. And a very good profession, noble profession. And here, here we have to see the free professional indemnity insurance coverage also here. In respect of the construction activity also we can finance. Here what are the types we can finance? For their equipments, vehicles, etc. we can finance. But we should ensure the firms and companies in this construction activity should have a good rating. And one more thing, the amount also as per the need based finance we can finance. But collateral security is very much required here. Collateral security is very much required in the form of urban property. Okay, and the competitive interest rates we can charge depending upon the market. For transport operators also we can finance. One is for purchase of new vehicles. Second one is expenses related to repairs, and sometimes purchase of second hand vehicles also we can finance. But while financing second hand vehicles we have to take a mechanical or engineer valuation certificate, and the eligibility is transport operators. Okay, and here the finance is need based finance, and repayment will be up to 5 years, and margin will be 20 to 25%. Okay, and while financing vehicles, the banker should see wherever possible they should have a tie-up arrangements with dealers, etc. Extending finance under tourism finance. One is to purchase the vehicles, necessary vehicles, transportation of the public. And one more thing, construction of cottages and development of tourist spots. For all these things, the banker can finance. Eligibility, individuals, proprietorships, partnerships, trusts and companies, etc. And the quantum of loan is need based. If they want to construct cottages, and we have to take the civil works, and if they want to purchase the vehicles, let us take the quotations. And the repayment, if it is working capital, it is on demand, it has to be repaid. In respect of the term loan, it is repaid in 3 to 7 years. Okay, here benefits is it will help the tourism, and the margins will be 20 to 25%. And collateral security also to obtain 50% of the loan amount. Let us see finance to the contractors. One is purpose. Here the banker will provide working capital, term loan, bank guarantee, LC, etc. to the contractors for purchase of construction equipment, transport vehicles and other equipments whatever they require. And please see, the finance eligibility should be first class contractors with a repute undertaking works on behalf of the central, state governments, public sector undertakings, reputed private sector organizations. And the quantum of finance will be need based. Okay, and working capital on demand, it has to be repaid, and term loan maximum 7 years in equated monthly installment. Okay, all these things we have to ensure in respect of the contractor. Bankers are extending finance to educational institutions. Here the purpose is purchase of land, building, construction of building, and purchase of furniture and fixtures, equipments, lab equipments, and for transportation of vehicles, for transportation vehicles. Okay, here who are eligible? All institutions with good standing and adequate source of income and borrowing powers, etc. we have to verify while financing to the educational institutions, and should have a necessary approval from government and local bodies for starting the schools, and computer training institute should be excluded here. and it is a need-based working capital and term loan. And primary security is hypothecation of assets purchased. That means if vehicles we have given, it is hypothecated to us. Collateral is personal guarantee of promoters, trustee, etc. And equitable mortgage of immovable property also we have to take. And here the margin will be 20%. And one more thing, second loan also we can give depending upon their income and also need. This SME sector is becoming suppliers to the global manufacturers. Please note it. MSME finance is more profitable to the bankers because in addition to normal finance, the banker will also get other non-fund based business like letter of credit, bank guarantee business, etc. Financing to the MSC sector is win-win to situation. This financing to the MSME sector, there is a better spreads in interest rates. And one more thing, risk is widespread. And now everybody is better equipped for financing the MSME sector. And less complexities. All these are one of the areas which will encourage the MSME finance. MSME means micro, small and medium enterprises finance.